If you have diabetes, insurance for wound care is about health, not just money. The stakes are huge. Diabetic foot ulcers cost the U.S. up to $13 billion annually. The good news? Most insurance plans, including Medicare, do cover necessary treatments, at least for now. Medicare plans to make major changes to wound care on January 1st, 2026. If you have non-healing wounds, don't wait. Contact your physician or call CureCare at 888-949-CURE to treat you now before the end of this year. Coverage isn't automatic. The details in your policy can make or break a claim. We'll break down Medicare, expose private insurance hurdles, and show you how to win. Let's start with the benchmark for most U.S. insurance, Medicare. It's broken into parts, and each has a specific role in wound care. If you're admitted to a hospital or a skilled nursing facility, Medicare Part A covers your wound care. This is for intensive inpatient treatment. For most people, wound care happens on an outpatient basis. That's where Medicare Part B comes in, covering doctor visits and treatments. Part B also covers many supplies like specialized dressings, alginates, foams, and hydrocolloids. When prescribed by your doctor, it even covers preventative care, like foot exams every 6 months, for those with diabetic nerve damage, stopping problems before they start. So if the coverage exists, why do so many people face denials? It all comes down to one thing: proving medical necessity to the insurer. Your insurance company isn't in the exam room. They rely completely on paperwork. What specifically must be in that paperwork to get you approved? The single most important document is your provider's detailed order. It can't just say wound dressings. It has to be incredibly specific. It must list the wound's type, exact location, and size. It has to specify the exact dressing, the quantity, how often to change it, and for how long. On top of that, your provider must be enrolled in Medicare, and they must use the correct diagnostic codes. Any error here can trigger an automatic denial. Now let's apply these rules to advanced treatments that can prevent amputations. They are often covered, but the documentation hurdles are even higher. Take hyperbaric oxygen therapy. Medicare may cover this, but only for chronic diabetic foot ulcers, Wagner grade 3 or higher, that failed standard care. The same applies to synthetic skin grafting. These can reduce hospitalization, but insurers demand extensive proof that simpler methods have already failed. We asked why claims get denied. For these treatments, there's another major hurdle: prior authorization. Your doctor must get approval before you start. So Medicare has clear, though strict rules. But what happens with private insurance? This is where it gets even more complicated and unpredictable. Take Aetna. They might cover skin substitutes, but can also label them investigational, creating a loophole for denial. United Healthcare is even stricter. They cover specific brands only after 4 weeks of failed standard care and limit the number of applications. And here's the most frustrating part. Some private insurers will deny a treatment as unproven, even after giving you prior authorization. It can feel like an impossible system. You have coverage, your doctor provides the documents, but you still get denied. So what can you do about it? This is where your knowledge becomes power. That detailed documentation we discussed, it's your primary weapon in a fight. But you also have legal protections. First, under the Affordable Care Act, an insurer cannot deny your treatments simply because you have a pre-existing condition like diabetes. If your claim is denied, you have the legal right to an internal appeal. If that fails, you can demand an independent external review by a neutral party. But be aware of the timeline. You typically must file your initial appeal within 180 days of receiving that denial notice. Don't wait. So let's bring it all together. Coverage for diabetic wound care is generally available, but it is not unconditional. Success depends on the details. Your first step is to be proactive. Talk to your doctor to ensure their notes are detailed and meet the specific requirements of your insurer. Second, know your specific plan. Call your insurer to understand their exact rules for prior authorization on advanced treatments before you start. And finally, remember the denial tactics and the power of an appeal. Never accept a denial at face value. You have rights and the evidence to fight back. Controlling this system is a part of managing your health. Stay informed, stay persistent, and advocate for the care you deserve. For information, contact CureCare at 888-949-CURE.